You look, the next candle I'm search for the power of three. Let's go to the inside this fair value gap monthly for the manipulation phase for the Nasdaq. Suppose I look for this external liquidity high taken, and the next move I look for one internal liquidity, maybe inside this weekly fair value gap. Okay. In Dow, same dynamic, price take this high external liquidity and probability price return to this BC and previous monthly high. Update the market review for the second week the month August. In the screen I have the same three markets, Nasdaq, SPUS and Dow. In the last week we expected the monthly power of three. In Nasdaq, the monthly power of three is the open and immediately bearish moves to the fears, this supernatural. And the drawn liquidity for Nasdaq, this is monthly fair value gap, right? For the first initial moves for the power of three, the manipulation phase. SPUS is already inside in the internal liquidity. The last week I say SPUS take this high external liquidity, and we expected the next moves to the internal liquidity inside this fair value gap weekly. Daily chart, Nasdaq, order block, BPR reactions in this point, move to the sell side liquidity and daily BC. The next draws on liquidity, I look for this low. This is the previous monthly low, and I will expect the next moves inside this monthly fair value gap and take the sell side liquidity. SPUS and daily, I have this CB order block and price return these order blocks and move inside this BC daily. The next moves for Dow is inside this daily BC. This is the first analysis. This is the for order flow only purpose. When you see the high time frame chart, monthly time frame, weekly time frame, I look for the timing and I look for identify what phase of the power of three is in development in the present moment. This is only for order flow. When you have the order flow clear, it's the moment for see the lower time frames for structures, standard deviations, PDRAs, but it's necessary first the order flow, identify the order flow. This is the most important thing, the order flow. Let's go to the Nasdaq, the lower time frames. In the screen, I have these monthly candles, the monthly fair value gap, and I look for the range inside these monthly candles, and the last candle, previous candle, monthly candle, I have this range, this high and this low for projections for the next move to the monthly fair value gap. If you see the last range, I have multiple standard deviation range 1, 2 and 3. The 3 last range, it overlaps in premium 2.5 deviations, 3 deviations, 2.5 deviations in the same area. This is the overlap standard deviation. I will expect the retracements or reversals. This is the range for projections for the retracements or reversals. And you look, the 1 and 1.5 is the silver bullet zone. When price close below this fair value gap, I have the new supernatural. I will expect the next move inside this area and offer support or resistance for the bearish moves to the monthly fair value gap. This is the supernatural inside the silver bullet zone. Okay, the next moves silver bullet zone 1 and 1.5 move to the 2 and 2.5 deviation. This is the standard deviation confluence and synchronization with the high time frame order flow and the high time frame power of 3.